JSE Safex style options, a great choice.
Welcome back to Wealth and Wisdom. With me tonight is Greg Kanglius, who's showing us how to trade the ALSI. So, Greg, what are we looking at here?
This is the depth of the ALSI and the ALMI. This will show you the buyers and the sellers and the current trades that are traded and the price where it's last traded. You'll notice that the ALSI is at 31,315, up 177 points on the day. And the bids will show how many buyers are willing to buy at 315 and the sellers at 318.
Okay, so that's your bid offer spread. You can see it's pretty tiny. I mean, that's 3 points, bid offer spread, and it's already moved 177. So to earn your way out of that bid offer spread, that's quite easy in this contract. And then you can see, I mean, what can this tell us by the different volumes and the different prices sort of on the left and right when we're looking at that bid offer window?
Well, if you see greater sellers than buyers, then the markets tend to trend downwards. Not necessarily with the ALSI. It depends on who the players are. You might have someone selling for a particular reason and coming in at 315 and selling, but there'll be buyers at this particular time and they'll want to buy those. If the spread is tight, and the spread is normally between 5 points, then it's easy, like you say, to get in and to get out.
So you change your mind. You're not kind of stuck to the trade. Whereas if you've got something with a huge bid offer, you kind of get stuck in that trade. And you kind of got to ride it for a longer time period to earn your way across that bid offer spread.
That's correct.
So we can see the different volumes. I mean, it's quite interesting. We can see right here there's a 10 and there's a 7. So the asks, the prices, here we go, 324. The guy's willing to sell to 324. There's quite a lot of depth in that window. You can get quite a lot of trading done. And you can see there are some sort of sellers at that higher level, but they aren't at the lower level. If that keeps refreshing with lower prices, the market's heading down. It keeps refreshing on the bid side with higher prices, the guys are following it up, and it's going to go up. So it's pretty useful to look at just on a regular basis. I like this feature here of the last 20 trades. You can see what's happening, sort of the fight between the bulls and the bears. You can see it happening in live action here, and it just keeps updating and showing you that. I mean, it's really nice functionality.
Typical trades on the ALSI would be between 1 and 10. You'll have buyers and sellers of 25. Occasionally someone will come in with a 50. 100 contracts. It's quite rare.
But it does happen.
It does happen.
But I mean, when there's 100 contracts, the market's going to get pinned at that level. It'll just gradually keep coming back to it because people are like, yeah, I want to do business there. It'll move around it, but then just keep hitting that level.
There'll be speculators that will run against it, Joe.
Okay, so there'll be guys trading against it. Okay. So what kind of a chart is this? I mean, it's got these funny long lines on it.
Yeah, we're looking at a Fibonacci retracement, and this shows support and resistance levels at certain times. And this is for the past 5 days, the ALSI over the past 5 days, and you'll notice that we've broken above the resistance level, therefore the market will go a lot higher today. Currently, you'll see that the levels of resistance and support and that trading band that we were discussing earlier, and you can buy and sell within that trading band.
So is this kind of a trading band here? There. I mean, this is the trading band for the current market. Is this sort of midline there?
The midline.
And then what are these big blue lines? What are they showing?
These are these candlesticks. The blue will indicate market trending downwards in that 10-minute range, and the see-through white candlesticks will indicate market moving upwards at that particular time.
So this gives us like a micro snapshot. We're doing the same thing basically of looking at the trends, but now we're looking at it on a 10-minute basis. Are we up? Are we down? What is the 10-minute? Is it a down 10-minute or is it an up 10-minute? If it's a down 10-minute, that's the blue lines, the candlestick. If it's an up 10-minute, then it's the white lines. And then I mean, you can see that maybe the white lines sort of build together and the blue lines here build together. As the blue lines come down, you can sort of hop on there.
Then you hop on that trend. That's totally correct. Once the moving averages cross over, and you'll see one straight in the middle where there was a typical moving average crossover, that's when you buy.
So that one there, is that? There,
Or that
that
one?
there, there
Yeah.
we go. So that's crossing, and it's saying buy.
That's
and
saying
that's
buy.
like your 5 and your 12.
That's
So your 5 is crossing your 12. So it says the 5-minute
buy.
average is more bullish than the last 12-minute average. So now we're saying buy. Boom, we hit a buy. We were right. Look at that ride. We catch it all the way up there. And then down here it says sell. A bit of a false positive because it's not that long. Then you've got to turn quite quickly on a diamond. So, Greg, these guys trading the Aussie, each trade, they're taking on 310,000 Rand of exposure. They're putting down 18,000 Rand of margin. They're paying away something like 10, 20, maybe 50 Rand a trade. So, what sort of returns does a decent Aussie day trader tend to target, look for?
Well, it's difficult to say. It can be between 10 and 20% of your capital that you utilize.
So 10 and 20% of your capital, I mean, that's over a day. You're making 10% a day if you're getting it right.
If you're getting it right, it's 10% per day. And if you're getting it wrong, you're losing 10% per day.
Okay, so if you're getting it wrong, it's 10% per day. Getting it right, it's 10% a day.
Yeah.
These are some quite scary numbers. It's quite a high adrenaline game. And as a retail guy, we've got to remember the trend is your friend.
Yeah, you've got to go with the market, make sure that you've got stop losses and you get out of the market quickly. There's many factors that influence the market, and if you're caught on the wrong side, make sure that you get out quick.
Get out quickly. Thanks so much for being with us, Greg.
Welcome, thank you.
Thanks very much for watching Wealth and Wisdom. Hopefully you've learned a few things about candle charts and moving averages and some of the ways you can make money in this exciting, tradable market of the Aussie and the All-Me.
Wealth and Wisdom was brought to you by the Johannesburg Stock Exchange.